Prashant Biyani, Vice President, Institutional Equity at Elara Capital, joining us to tell us what are the top picks on sugar and how beneficial is this fundamentally. Prashant, a very good morning. Let's just get your first take on which are the companies likely to benefit the most with this restriction on sugar diversion being lifted.
So the entire sector is going to benefit from it. Along with the resumption of ethanol blending, FCI rice has also been allowed for sale. So I think because of that, the dual feed manufacturers are going to benefit most for the likes of Balrampur. Triveni also has, I think, some dual feed capacities. So I think both these stocks should benefit. But the benefit is going to be for the entire sector because of this.
So here, Sri Renuka, Balrampur, all of them are buzzing, Praj, etc. But where do you see the most upside?
So right now we have Balrampur in our coverage along with Dwarikesh. So we will restrict to that in terms of upsides. Both these companies, I think, we are positive upon.
Prashant, this is one sector that, constantly gets impacted by regulatory changes, and in the sector that the promoters have not made enough money in that sense, right? And investors as well, I don't know whether they've made sugar as a sector has not created significant wealth in that sense for investors. Do you feel like this move or this removal of this cap could be long-term in nature? And if yes, if it does impact the earnings, will it be over the next couple of quarters? Will it be immediate? I know sentimentally it's a positive day, but getting beyond today.
Yeah, so sugar has been a cyclical sector previously, but once in the last 5 years, once the ethanol blending has been followed strictly, so I think the cyclicality has certainly been removed and the sector has given good return as such. There was a temporary disruption last year, but it was temporary and we were already expecting ethanol blending to resume. So I don't think that it is not a wealth-creating sector as such. It is just that sometimes it is cyclical. But because of ethanol blending, I think we are now on a secular uptrend in terms of business growth for these companies.
Large industries, Prashant, EID, Perry and Sri Renuka are all expected to get a 5 to 10% gap up. Too late, you think, to jump in, or is it okay? I mean, for a medium-term time horizon, these stocks could still be bought despite this 5 to 10% gap up this morning, or would you wait it out?
No, one needs to have a long-term view right now. I think at this point of time, the stocks have rallied in the last 1 month as well, quite sharply. So for the likes of Balrampur and all, which are venturing into PLA as well, and the benefit of this resumption of blending is likely to come in from H2. So the benefit will be back-ended in terms of both FY25 and FY26. But the full-scale benefit in terms of volume growth will be more towards FY26. So I think one needs to have a medium-term view if someone wants to enter the sector here. Having said that, we don't expect any negative news as such for the sector in the near term, because I think before elections, all the negative news that should have come had come in terms of temporary disruption of blending as well as cane price increase. Now I think the future triggers would be in terms of increase in sugar MSP, then revision in ethanol price. And if government allows export, then I think that will be the additional trigger.
One last bit around festive season. Do you see any concerns of a rollback on this, sugar diversion decision if prices start rising up, or that's out of the question right now?
Certainly not. We are, as a nation, we already are likely to have 8.5 million tons of closing stock of sugar by the end of this season, and maybe a similar number or around 7.5 million tons of sugar stock by the end of next season, even after considering 4 million tons of diversion for ethanol blending and before allowing export. Typically, we need around 5.5 million tons in terms of closing stock. So we still have headroom for 1 or 2 million tons of export. So even if there's a temporary price increase, I don't think there is going to be any rollback from this decision. I think because that will also be very sentimentally negative. Plus, I don't think anyone would be in a mood for that right now when government wants to increase the ethanol blending from petrol, from diesel and various other sources.